What's up everybody, my name's TradeX, this is my trading den, and today we're going to be covering the price action for the Thursday 22nd of March, and it also happened to be the day I took my biggest ever trade, which is 31.25 handles, and it's an absolute monster. So we're going to break down exactly why I took it using SMT, smart money techniques. We're also going to be covering draws on liquidity today, so a lot of value as always. So let's get this intro out of the way and then we'll jump straight into it. So without further ado, let me just show you the trade, right? So here it is. I got in at 3992, got out at 3961.75 for a total of 31.25 handles. And we're going to get to it. We're going to get to that. But first, I just want to talk about price action running up into this 1117 reject, okay? We all know that if prices it has a lot of volatility in the day before, especially if it's something like FOMC, CPI, big news data, and we have a lot of range, what are we expected to get the next day in the AM session? Chop suey, right? Very difficult, high resistance liquidity runs is when we decide to sit on the fence and sit on our hands. So inside Red Pill, we did absolutely nothing. We chilled, we waited, we did absolutely nothing. But we were waiting for price to draw up into a premium of yesterday's price action, right? Now, if we take this range here from high to low, you can see that price ran up into an OT. Classic price action, okay? It's either running from a discount to a premium or premium to a discount, searching for liquidity above old buy stops, or looking for buy stops or sell stops above buy side or sell side liquidity, or it's going to rebalance and imbalance, okay? That's all it can do. Now, once price got up into the OTE, you could have been looking for entry short, okay? I personally didn't take that. I took an entry later on, but my boy Perez, who's also a Red Pill elite trader, he actually got in down. We sort of split the trade. He got in he got up here and got out down here. I got in down here and got out down there. So you know, he put those two trades together. We caught the entire range. But the reason why I stayed out is because price was just continuously pegging up. I just don't want to get caught in that sort of price action, right? I knew it was going to be that kind of day, so I decided to, keep my cards close to my chest and just sit on the fence. But ultimately, what was price drawing up to? Price was drawing up to yesterday's midnight price, okay? It was yesterday's midnight price that price drew up into, and it also happened to coincide with consequential encroachment of this hourly wick, right? But more importantly, it was up in the OTE zone of that displacement leg. So for you guys who are learning, you just need to know that price is running from a discount to a premium or premium to a discount. And if you got that, you were 50% of the way there to a successful trade, right? You could have banged any entry up here, and as long as you had held it for the rest of the day, you would have had a lovely trade. So there's something to take from that. And it's, for me, I saw a lot of people wanting to jump in early and short early. And I just have a piece of advice for anyone who's new. Just set a simple rule that you do not, when you're learning, take a short if you're in a discount. And so if you're inside a discount, you do not short. Just a simple rule. Very, very simple rule, but it will keep you out of more bad trades than it will keep you in good, all right? So only take a trade if price gets above equilibrium and into a premium, and that will keep you out a lot of bad trades. Honestly, that is a gold piece of advice, and especially when you're learning, okay? So it would have kept you out of all this chop when you were trying to short it. Now, price ran up to that midnight open price, and we had some nice opportunities, right? We had some nice opportunity. We had a mitigation block here that formed. You could have taken this entry. You could have also waited for price to run back up into this fair value gap for a drop after the market structure break. Again, all of this for me was just a no. I had a feeling price might want to run up into a higher time frame, maybe come and sweep these highs here and fill this fair value gap again, or even run into this hourly consequential approach with a wick at sort of 40.55. Which would have coincided with this daily wick for a 2 p.m. macro algo run to run the lunch lows, right? So that's the 2 p.m. macro that you guys will be familiar with. If not, I will do an episode on that soon. But anyway, price continued to peg down, and it was at this point it gets really, really interesting, right? It's at this point it gets interesting. Why? Because I was looking to see what Dixie was doing for a start. And I always believed Dixie was going to draw back up into this gap. Okay, so this new day opening gap was left open. So if we look on ES had, and I'm just going to jump onto this chart because it's my NDOG chart, you can see that we had a regular trading hours gap that was left open. So when price rallied off today, it hadn't closed in that gap. And now if we jump on to Dixie had done the opposite. It left its gap up here. And as we know, if Dixie goes up, what does ES do? It goes down, right? So that would have given you further confluence as to why price was going to run down. That was number one for me. The second was I was doing smart money techniques today. And for those of you who know how I trade, I like to take confluence from SMT by using relative strength across the indices. Okay, so up here we have ES, this is NQ, the Nasdaq, and this is YM, so down, right? And what I was looking at was here. So we know that if an old high, or I'll tell you, and so you guys can now know this, if we have an old high and it's inside a SIBI or a BISI, so it's inside an imbalance, this can be used as support term resistance, right? This can be used as classic support. So I only use old highs if it's in a BISI or a SIBI. Old highs or lows, right? If it's in a BISI or a SIBI. And you can see that it respected it here. And around this point here, you can see where ES was, right? ES, I got through it, but it was pegging back up again, right? And I saw a lot of people wanting to short this, long this, right? My theory was I was waiting for YM to break because everything else was miles off. So NQ was still way off, ES was pegging back higher, but Dow, you can see how it was teetering on the edge. And if it broke this line, it would bring all of the other indices down with it. So I called out in Red Pill, I said, keep your eyes on YM. And the reason being is that I was waiting for this line to break, and then this, for me, was the market structure shift to take the short lower, right? So this is where I got in. I got in at 992, right? So as soon as it broke that that line in the sand here, I was in. That was me. I was gone because it was coinciding when YM broke through this line here, right? So when YM got through here, that was my signal to go. And that was the market structure shift I was looking for, right? Now, as soon as I was in, you could have easily been thinking, okay, right, well, where was I targeting? I already had where I was targeting in mind lined up before I even took the trade. And the only reason why I took the trade today is because it had such wide range, okay? So if we just jump back onto this chart, so I got in up here, right? Now, this line here, this white line, this indicates the RTH. So if I just jump onto the RTH chart, you can see that this is that line here. So this was the close of this RTH gap, right? And so this was my first target. I wanted to see how price interacted around there. And we didn't get a strong bounce. There wasn't a strong reaction from it, okay? It ran up and then feebly fell back down, and there wasn't a strong move away. So I thought, well, I'm going to hold this. And what was my next objective? So then I was looking at the hourly chart as what could be potential draws. And so we had this hourly, and we had consequential encroachment of this rejection block was one draw, okay? Which was down here at 39.63, which was here, okay? But then below that, we had an order block. And so my idea was price would run into that order block given how heavy it was. And this is where I placed my exit. And so I've lost it now, but that was, I think I deleted it. Hang on, where is it? Let me bring it up just for good measure. All right, so there it is, 39.61.75. So I actually had a better exit than that. You can see it ran down, and I was actually up 35.75 handles. I let it come back on me. I was fuming. I was angry at myself. The execution was off. But anyway, that covers that. And price ultimately, chopped back and forth, came back down to that order block again. Got a little, institutional entry order drill off of that order block, and then moved higher again, and ultimately moved back into that level on the that we were talking about before we went short, right, in and around that sort of equilibrium of that range. Really, patient day. This is the lesson to take away from day is knowing when to trade is as important as knowing when not to trade. Honestly, it really is. And the power of being able to sit on your hands and do nothing, even when you see a setup, is so powerful in your long-term ability as a trader to become consistently profitable. Seeing a trade and not taking it, that is power, and that is freedom as a trader. So try and take that with you. But what did price run down to? you know, was another Confluence that we had down here. So it was also the upper quadrant of this wick that we had here. I thought if price was going to be super heavy, it might have run into the weekly consequential, but which also coincided with this SIBI on the hourly. So I was looking to see if price wanted to continue run down here. This would be a potential draw for me in the coming days, down into the SIBI, consequential encroachment of this wick. But guys, if you're valuing this video, guys, please do consider smashing that like and subscribe. And as always, trade safe and trade smart. And I'll see you on the other side. Take care, guys. Bye now.